See what happens. Is this going to get bigger? No? Let's see. Hey, KYP. How are you? KYP. Can you hear me, KYP? Can you hear me? I've got these. I was thinking about you, KYP. You've disappeared. Hey, us, KYP. Loud and clear. That's good. Good, good, good. Um, I'm just sitting at, I'm trying to give you a little, of course, it won't come up right when I need it. Okay, here, maybe it is here now. Nope. Uh, I'm trying to tell you where I'm going. And it's every time I tried to pull it up today, it came up right away, and right now it's not. But anyway, I'm going to Denver for an oil and gas conference, and so it shows up Amelia. Um, let's see. I guess I got to put the date in it. It shows Theo and Amelia Fragrances. Oh, how that? No, how that? Okay, there we go. Presenting companies. All right, so I'm going to go see presentate. I guess I look right there. I'm going to go look, see presentations, meet people, a lot of my friends and contacts. And I used to be the only Democrat that, well, there were two of us, but I don't let him know that I've lost my loving feeling. Company called Africa Oil, APA. I'm going to see APA. I'll update you on that one. There's a water management company, which you might be interested. There's a Denver-based exploration company that focuses in the Permian. There's one in Canada. I'm not that interested. I mean, I like Canada, but I don't know what value I add in Canada. Here's one, Bison Oil and Gas, Blue Spruce. Calfrac, I don't know anything about that. Chapman Nuclear. It's a nuclear company. Don't know much about that. And then I'm gonna at lunch on Tuesday, Chevron. And that's gonna be a great, just to hear what Chevron is saying. And the CEO's my age, or actually slightly younger. I don't know what that company is. Don't know what that company is. And this one, this is the one from Australia. I'm going to go see Donovan. There's a couple from South America. Flowtech, I'm probably going to skip. Franklin Mountain Energy. Permian Basin, I'll go see that one. Geothermal. Here's Granite Ridge Resources. And I know the CEO, so I think I do, so I'll go see that one. Wow, listen to this one, GTO Technologies. It's a Colorado School of Mines startup, which is dedicated to creating and commercializing technologies required to make baseload carbon-free electricity a reality. Enhanced geothermal systems. I might go see that just for the hay of it. Hemisphere Energy, don't know much. Laramie, I like the name. Rockies, I know them. Almost to the bottom. Lycos, I don't know. It's so funny, I'm getting older. I used to go to this conference and I was the youngest person. And now I'm so, it's all changed. The biggest thing I've learned about it, though, is this market that we're in, that we try to invest in, is destroyed these little companies. Or it's destroyed the market for these little companies. But I think it's coming back. New Vista, Oklo, On Point Consulting. Hey, it's a woman-owned small business. Natural Resource Consulting Services. Hey, when women get interested in a business, big changes are coming. Pine Cliff Energy, natural gas. I'm skipping a bunch of them. Reza Energy, Ranger Energy Services, Recon Africa, Ring Energy. Ring Energy is somebody that I knew quite a bit, and they got bigger, and they're actually associated with Torchlight, or were, not anymore. Sandridge Energy, all those guys. Select Water Services. Tenaz Energy, I like that name, Tenaz Energy. It's Canada, Netherlands gas assets in the Dutch sector of the North Sea. That might be fun to listen to. Ubatera, which I think is a great company. I know the principals there. U.S. Department of Energy loan programs. I'll go check them out. UP Curve, Valco Energy. I doubt I will see that one. Vidun, Austin Chalk. That's interesting. Vitesse. This one's based in Denver. X-Oil and Zephyr. All right, so those are all the names I'll go see. I did want to come on and tell you I can't get Ham on because there's no way to put a microphone and set it up. But I spoke to Ham earlier, both yesterday and today, and primarily now he gets his enthusiasm sometimes gets me carried away, but I'm not as optimistic as he is, but he's very optimistic, which you got to listen to on GTII. He thinks that with GTII tomorrow that we might hear from the judge. Now, he doesn't know for sure, but he's hopeful that big things are coming for GTII if the guys that are, and I think it's all men, sorry, I think it's all men. But anyway, the whales and the guys pushing this through, if they can move it through receivership, they have a big potential project to put in there. And so he got me excited. Now, my own experience with courts and all that is it usually takes forever. There's all sorts of defenses to everything, and delay. But we'll find out. So that actually got my mood up a little bit on GTII, and I want to let everybody know that. Then we can talk a little bit about gold. I went through the conference, and I guess the Democratic National Convention is this week. Let me see what kind of questions you have. And it's great seeing KYP. Hey, Darren. How were you? Hey, Zizu. It was on my list to call you today. I saw your email, but it was. I went through a little. Anyway, I ran out of time. But I'll try to do it. I'll try to do it tomorrow. Although I'll be in meetings most of the time, but I'll try to do it. I'm in Detroit City, where, well, New York City's where the girls are pretty, but there's some pretty girls here. It's a nice airport. It's a great airport. And it's really impressive airport. Hey, Nikolai. Hey, Steve. Yeah, I'm gonna work on deals. I am trying, Tom, to put, keep it zipped until it can, but I am trying to make things happen. I was looking at some of my notes. I think we've been doing this 2.5 years, and no wonder some of our moods are dark, and sometimes I get very short-tempered. But and I'm trying to remember where I read the article, but I think small cap stocks are going to have their day, and this bear market we've been in, I think, is coming to an end. Ham's also very, very upbeat on finger motion. I'm a little in the camp that everything we do now in August, not much is going to happen in August. Maybe a stock will squeeze out of the blue, but we got to wait for everybody to come back to school in September before things start moving. But it gives us a chance to talk and all that. Hey, the one. Yeah, Pit Lolly. I'm at the airport. I'm in your city. Cool. Cool. I had to take my dog to the dog whatever boarding by Uber. The Uber guy wasn't very pleased. Hey, Susan. I'm just catching a connection onward to Denver. I'm really excited. I'm going to be seeing. Last year, I didn't go, and I've gone to this conference for, I'd say, 26 years. The only time I've ever missed it is when I was meeting investors in the Middle East or elsewhere. And last year, I missed it last year because my dog nearly died. But he's here now, still. I don't know. I found an article on 4 gold stocks to buy, but we can do that. Let's see. Let's see if there's any. Hey, Flora. Happy Sunday. Let's see if there's any current. You're from Detroit and you're gorgeous? Yay. I'm sure that you would be gorgeous in any city you were from. But maybe it has something to do with Detroit. I'm on Delta. Yep, I'm on Delta. I'm at A6. A2's over there. I don't know what this is. I don't know what that one is, but A6 is right over there. And that's where I'm catching my flight. And about it, let's see, it boards at 8:59. So I guess I can do this for about an hour if we last that long, if I'm even interested. I bought the Barron's, and this is the title of it, Powell's Big Moments. Fed Chair Jerome Powell takes his the stage at Jackson Hole. What lower interest rates will mean? I'm just not so sure that he's going to lower interest rates. So let's find out. Barron's is a good place to get a lot of ideas, or it used to be, before markets changed. But let's see what it says in here. My Tesla driver stocks, big funds here. This is what's going on. Big funds lighten up on the Magnificent Seven. Hedge funds and others shift their sights to healthcare and consumer sectors. See, that's what happens. Consumer sectors are viewed as defensive and predictable earnings. Soros snaps up Bitcoin miners. Wow. It's spelled Bictcoin. Is that a mistake? Harris picks politics over economics. That was a bit of a mistake, I think. She's going to build an opportunity economy. D.R. Horton is the home builder down right now. I don't know about that. Greenlight Capital has a new stake in Peloton Interactive. Yeah. Nothing really interesting there. Here's the drive. You guys who own worldwide. What WDHI, Worldwide Holdings International. Anyway, here's Chipotle Mexican Grill is setting up drive-through lanes, and others. Starbucks, Sweet Green Kava Group, Wendy's, but they're adopting new technologies for the drive-through. And one thing that Worldwide Holdings had is an AI for ordering at Jack in the Box. I remember that. Minors are at risk at gambling. Okay, this is the one. Coming soon, first rate cut in 4 years. I just don't believe it. Somebody's going to miss their flight. But let's see what they say. The most consequential event this fall won't be the U.S. election, a war in the Middle East, or even baseball's World Series. For most Americans, it will be the first reduction in U.S. interest rates in more than 4 years. I don't believe it. Now, the fact is the 10-year and the 30-year bonds have gone down, and I think the Fed is doing that. I think they're the ones buying that. But this is talking about Fed cuts. Okay, an expected rate cut by the Federal Reserve in mid-September won't change the price of eggs. No kidding. But it will signal the start of the next phase of the monetary policy cycle. Well, we'll see. If the Fed eases insufficiently in this cycle, the economy could tip into a recession. If it cuts rates too quickly, it could reignite inflation. Do you guys really think inflation is gone? Not to mention a speculative frenzy in the markets. But the Fed could execute a fabled soft landing. See, and I don't believe they're going to be able to pull that off. And I'm not getting negative on my view that the stock market is going to go massively higher. But, okay, so his keynote address is on August 23rd at Jackson Hole. So we'll find out. It will lay the groundwork for the coming shift in rates spurred by the deceleration of inflation in the past 2 years toward the central bank's 2% annual target. I don't see it. The year-over-year CPI inflation rate fell to 2.9% last month. That's not 2%. The first reading below 3% since the spring of 2021. Recent monthly readings are at a pace that would total 2% or less if they continue for a year. The Fed last lowered rates in March of 2020. That's pretty amazing. Markets are betting that the Fed will cut the federal funds rate by at least 25 basis points at the meeting, bringing the target range down to 5% to 5.25%. And here it says, with a September rate cut all but assured, the debate on Wall Street is shifting to what the easing cycle will look like thereafter. Futures markets are betting on a more aggressive front-loaded easing cycle. Current pricing implies the greatest odds of a full percentage point of cuts. That's massive if it happens. A full percentage point of cuts before the end of this year. And then more importantly, or as importantly, what's going to matter is why is the Fed cutting? Will it be lowering interest rates to rescue the economy from recession, or just to normalize rates? You guys, A31 for a lost item. I remember when 5%, 6% was a low. All right, that's enough of that. So what did Milton Friedman say? Monetary policy famously works with, quote, long and variable lags, Milton Friedman said in the 1950s. Prospect is needed immediately for pre-boarding at 8:15. I met him once. Milton Friedman. He came to my school. Here's a picture of Ronald Reagan with Paul Volcker. But if you've been listening here, you know that Jimmy Carter appointed Paul Volcker. I love this. Hey, I don't know who this guy is. I love this. This is awesome. This is my cup of tea. This is an interview with Jeff Currie, Chief Strategy Officer of Energy Pathways, Carlyle. You know what the title of this is? It's written by Avi Salzman. You know what the title of this article is? Gold, oil, and copper are in a super cycle. Jeff Currie has been, let's read about Jeff Currie. Does it say who he is? No, it doesn't say. Okay, Jeff Currie has been charting the path of commodities for decades, scouring the globe for clues to where oil, coal, I'm not a big fan of coal, oil, coal, copper, and gold prices might be headed next. Currie spent 27 years at Goldman Sachs, eventually becoming the head of global commodities research. Wow. I must have missed those 27 years. His correct predictions about China's rise in the early 2000s and the U.S. shale boom of the 2010s have shaped the investment conversation around commodities for years. One thing you have to be careful of, these guys and women, there was a great, what was her name? She was at Meredith Whitney at Oppenheimer, made a tremendous call on mortgages around 2008, and then she went out and started her own firm. One of the problems, when you're inside of Goldman Sachs, when you're inside of a big research firm, sometimes you have advantage that help you predict. When you go out on your own, you don't get all that research. So they're not always as good once they leave. But we'll see. So this year, Curry was named the Chief Strategy Officer for Energy Pathways at Carlyle Group. I knew one of the founders of the Carlyle Group. That's also where Adina Friedman worked on her Smile. So his job is to analyze commodities markets and investment ideas for the private equities firm infrastructure and energy teams. This this is what's coming. Right now we're in August. So September we're still dealing with the technology companies, the seven stocks, interest rates. And so the rest of this year is going to be focused on sort of closing out those positions, making sure everybody gets in the top quintile so they can impress their investors and earn their fees and their bonuses. But I think come next year, there's going to be a wall of money going into the commodities sector. And if you think about how the United States Navy has patrolled the world seas since World War II, and the dollar has reigned supreme. But now there's other countries wanting to join in, which isn't all bad. But it's going to disrupt our supply lines. And you can think of other reasons too. So, what does that mean? It means the United States probably needs to reindustrialize somewhat. Now, maybe Mexico will be where the industrial capacity is, but maybe it comes back here. That's the beginning of a commodity cycle. Okay, so Curry just spoke with the Mark Barons. Here he is. This is Curry. KYP will think he's
Attention in the terminal.
very impressive looking guy.
Anyone located a dark blue laptop bag with an iPad and a laptop, please turn it into the police podium.
Barron's question is this: the stock market and commodities have had a wild ride, almost as if something has shifted. What's your read? Clever question. Jeff Curry, the most significant development is that we have likely seen a turn in the U.S. interest rate cycle for the first time since 2019. I don't know. Maybe they're going to do it to get Kamala uh, uh, further selected. I don't know. And then Barron's asks him, it looks like the Federal Reserve will cut rates in September. What kind of commodities will benefit the most? The most interest rate sensitive sectors, which include green energy and copper. Green energy, those stocks have performed like shite. Is it time to look? Absolutely. Clean energy is one of the most rate sensitive sectors in the global economy. The peak in clean energy occurred when rates were zero. Since rates have moved up, the pendulum has swung back toward traditional energy. God, economists. Anyway, let's take his views seriously. If you think the Fed is going to start cutting rates, it will swing back toward clean energy again. So you want to be a buyer of clean energy here. What other opportunities? The difference in investing in this cycle versus previous cycles is that the focus needs to be on a larger ecosystem, including things like batteries. Look what the shorts just did to MMAT, the most beautiful battery technology out there, and they destroyed it. But if Tesla comes up with a battery solution, wow. Okay, so you have to focus on things like batteries and combined cycle natural gas turbines. Natural gas is cheap right now in order to create a reliable energy system. I call it a reliability premium. The excess demand for electricity goes to these huge turbines. They're like big jet engines that run on natural gas. So basically, you want storage in your system like batteries, so the system becomes more functionally like fuels. Where does copper fit in? Attention, all military personnel. Copper is involved in all the key investment themes facing the world today. It embodies the demand around green spending, data centers, and deglobalization. See that? Deglobalization. Things are going to be coming home. You have been bullish on commodities for a few years. You've even talked about the idea of a commodity super cycle, which could lift metals such as copper and oil too. What does a super cycle mean now? It's a capital expenditure cycle. We call it the revenge of the old economy, and that's what I'm saying too. But he's much more impressive than I am. See, he worked at Goldman Sachs. Gotta listen to him. Meaning metals and energy, and spending on old economy commodities. Yes, it has happened before. It happened in the 1960s. After World War II, there was a global capex boom. We built up everything. By the late 1950s and early 60s, we were swimming in overcapacity. Inflation went down to very low levels, interest rates were cut, and the equity market ripped. The hot investing theme in the 60s was the Nifty 50, consumer brands such as Coca-Cola and Gillette. Then what happened? It was the revenge of the old economy. The country had stopped investing in all non-financial physical stuff. That's what's happened now. Exxon was a terrible stock during that time frame. A demand shock occurred with President Lyndon Johnson's Great Society initiative. The old economy companies and stocks were off to the races. There's a close analogy today. OPEC took advantage of this situation just as Russia has taken advantage today. It happened in the 1990s too. We had low and stable inflation and low interest rates, and the markets chased long duration stocks. In other words, all the tech crap of companies expected to pay out most of their cash flow far into the future. It was the dot-com era. And then again, the old economy stocks came back to life. The demand shock that time was China, the rise of China. The most recent period has seen this same dynamic. The shale oil boom put downward pressure on oil prices, and in fact, all prices. Oil runs through our economy. We had low and stable inflation and low interest rates, and investors moved into long duration stocks. AI, data, all this stuff, better, Bitcoin, all that crap. Like here he says it, like artificial intelligence stocks, which choked off capital for the physical market. And that's the opportunity. What is the demand shock now? The demand shock is all of this government driven spending, such as the Inflation Reduction Act, which Kamala Harris cast the tie breaking vote on. The Inflation Reduction Act, Orwellian name, which led to high inflation. But anyway, we can all differ on whether Biden and Harris came up with great strategery to reduce inflation. Let's go with what he says. He sounds like he's a blue guy. The demand shock is all of this government-driven spending, such as the Inflation Reduction Act in the United States and the Repower EU environmental initiative in Europe. We are off to the races again. There will be $750 billion spent on subsidies for green capex this year alone. That's amazing. Commodity prices have held up relatively well, but we haven't seen a rise in a straight line. This is a question. Is there a difference in this super cycle? One thing that makes this cycle radically different from the 1970s or the 2000s is that we don't have dollar recycling going on. In other words, petrodollar. Dollar recycling goes like this. Commodity prices go up. A country like Saudi Arabia earns money, earns dollars. It buys U.S. treasuries, and it puts downward pressure on U.S. yields. The lower yields in the U.S. create a weaker dollar. The weaker dollar reinforces growth outside of the United States. We don't have that this time around. What's different is that China is not buying U.S. treasuries. Thus, we don't have lower yields and we don't have a weaker dollar. So, what happened? After Russia's central bank assets were seized, central banks throughout emerging markets bought gold and sold their U.S. bonds. The United States and other countries froze $300 billion in Russian central bank assets held in banks around the world. Why? Why are people buying gold? Why are central banks buying gold? Because they want something that the United States can't touch. I would assume all these emerging markets are bringing their gold home and buying more, and that's why gold is such a powerful story. I wish we had made money in one of these trades so we could be buying it. We might. You might be surprised what happens over the next 1 or 2 weeks, and then in September with some of the stocks mentioned. Is that why gold has done so well in the past 2 years? The gold story is rock solid. The gold story is rock solid. Rate cuts are in front of us. See, I don't know. But the bond market, longer bond rates are coming down. So even if I'm right, this thesis can be right. I just don't know. We'll find out. The gold story is rock solid. Rate cuts are in front of us. Emerging market central banks are continuing to buy gold as they diversify their holdings out of the dollar-denominated assets. There is also continued strong gold demand from China as a substitute for investing in the property market. Gold prices can be driven, this is a question, can be driven by anachronistic factors. But other commodities usually need broad economic drivers. What are the demand drivers for other commodities today? I see 3 drivers. The acronym he uses is RED. The R stands for redistribution policies. The E stands for environmental policies. And the D stands for deglobalization. That's the one I think. All 3 of these dynamics have gotten much stronger. What do you mean by redistribution? Think about all those who got government benefits in 21 and 22. Low-income people. I don't remember that. Everybody picks on low-income people. I remember they handed out COVID money like it was candy, and people stole that money. But anyway, when low-income people get an extra dollar of income, it goes to consumption. That's standard velocity of money theory. They consume a higher percentage of commodities. Then look at E. The amount of stimulus going on to fight the war on climate change. The numbers are massive. Greater than 16 trillion in this decade alone, equal to all the spending China did in the 2000s. I really wish that Obama, I don't think Trump has the vision, But I wish that we had spent $1 trillion uh, securing Fukushima Daiichi, but whatever. Everyone ignores that. Okay, so how does deglobalization affect commodities? Okay, let's see what he says. This is Jeff Curry. I like to point out that China is producing more electric vehicles than any other country in the world right now. But it also, and this I don't like, but it's true, it also approved 106 gigawatts of coal fired generation capacity last year. So when we allow our goods to be manufactured in China, we're just exporting our pollution. They're putting the coal up at the carbon up in the air. So between coal and all the renewables, it is disconnecting itself from the rest of the world. That's China, in other words. That's deglobalization. It goes to show you that these three themes that drive everything are all connected. That's red. Redistribution policies, environmental policies, and deglobalization. You can connect deglobalization back to redistributionist policies. Think about tariffs. Why do you put tariffs on? To protect your manufacturing. All these countries are building out their own manufacturing. If you build out your own manufacturing, there's more commodity demand, more capex, more physical everything. So all three of these are closely connected. That's what I think we're going to see. We're going to see demand for commodities. Okay, question. You've been bullish on oil, but lately it's been pretty flat, trading around $80 a barrel. What's going on? So let's see what he says. The physical markets for oil are tight, but investors aren't there. I've been doing this for 30 years. Wow. That's longer than Ham. I've been doing this for 30 years and have never seen investors net short like they were about 3 or 4 weeks ago. I agree, and it's going to turn, and it could turn with a snap. Investor interest in oil is at extraordinarily low levels. It's not going to last. I'm not going to say demand is growing gangbusters, but it's still growing by 1 million barrels a day. The global trend for demand growth over the past decade. So it's still healthy in historical terms. And there is a rotation in supply. We expect an inventory decline of more than 2 million barrels a day in the third quarter. The market is relatively tight. So what he's saying is the world is going to supply 2 million barrels less a day in the third quarter, and demand is growing 1 million barrels a day. That's on an annualized basis, I'm sure. Could oil prices get to $100 a barrel? I'm comfortable in saying oil could get to the 90s. The question is, how will OPEC respond if oil rises to near 100? And then final question, copper.
Serves as a final boarding announcement for Delta Flight 1207 to Dallas Fort Worth.
Copper was strong this past spring, rising about $10,000 a ton. The incentive price to attract new copper supply is somewhere around $12,000 a ton. We think it'll reach an all-time high of $15,000 a ton on a real basis and trade higher in the next few years. It'll be volatile though. All right, then he goes on green. I'll skip all this. Real estate is coming back. Yeah. Real estate is coming back. The Dow's at 40,000. I think it's going to 60. S&P 5,000 is at 5,500. I think it's going to 7,000. NASDAQ is 17,600. I guess I'll say it'll go to 25,000. And then we'll have the Russell here. rising yen. Lululemon CEO. When others are fearful. All right, I'll skip through all this. Let's see what this guy says. This guy is at the Aiden forecast. The Dow Jones Industrial Average time to shine. August 14. The Dow Industrials have been trading in a major uptrend since 2009. The Dow's leading long-term indicator is also bullish and it has room to rise further. In other words, the bull market has more to go on the upside. As you know, tech stocks have been leading the market higher, but they're now slowing down. If this continues and the tech sector cools down somewhat, you could see a rotation that could result in the industrials outperforming the tech sector. It's not the case yet, but it's a possibility. That's Pamela and Marianne Aiden. San Francisco office outlook. San Francisco office vacancy rate hit an all-time high of 34.5%, up from 33.2%. The average asking rent fell to a 9-year low of $68 per square foot. The San Francisco office market is challenged on two fronts: a relative inability of companies to entice workers to return to the office, and a slowdown in the tech industry, which has resulted in a slew of layoffs. Tech companies have jettisoned some 44,000 employees since the beginning of 22. All right, then they go through all the stuff that you'll be bored with if you're not bored already. And here's the gold performance. Rate cuts hope sent gold upward, $2,486 an ounce. Healthcare costs are rising. Elizabeth O'Brien. Musk's pay package. Social Security solutions. There's no shame in holding cash. Barron's. Yeah, it's a layover. It's a layover. Welcome, damn Yankee. It's a layover. How'd you guess? I'll probably, at 8:30, I'll turn off. So let me see what some of your questions are, if there are any. I'm in Detroit, and APS 71. Aren't we in a soft landing now? Yes, that's what they're saying. I don't think it's going to be a soft landing next year, but I don't know, you have to separate the markets from the economy, I think. And then it's a question of, and I don't think it really matters who gets elected president, but if it's Kamala, I do know one thing. I think taxes are going to go up. If it's Trump, the theory of lower taxes, particularly for corporations, might help the United States rebuild its job base. I don't know. It'll be interesting to see, but I don't see a soft landing coming, and that's why I don't think they can cut interest rates right now. Hey, John, Platinum. I I read that article on Platinum, but I got to find a better one. Hey, Donna. Hey, Charlie Mack. Sideshow. I will meet you one day, and you'll agree with all of my friends. That you're gorgeous. I believe you're
In the interest
gorgeous.
of aviation security,
I believe you're
do not leave your
gorgeous.
luggage unattended at any time. Do not transport any item for someone you do not know.
I'm always
If you
good
wait
to the
for someone
Delta
to tamper with your
attendants.
luggage,
I'm always
or if a
good
stranger
to all
approaches you by carrying a
attendants.
foreign object,
But if I'll
contact
keep
an
my
airline
eye out for your
representative or
daughter
airport
and be
police
really
immediately.
nice to her.
All check and carry-on luggage is subject to search.
They do a great job. When I was younger, I might have gotten mad sometimes. I don't know. I can't remember. I don't think so. I always try to be kind. So I've got 15 minutes. These are 4 gold stocks. I'm not recommending them necessarily, but I do think a portfolio of miners is a good idea. And this is one analyst. Investors, any well-diversified portfolio should contain gold. And we recommend an aggressive overweight. I don't know who it is. Oh, David Rosenberg Research. This is a list of the 4 best positioned gold stocks according to the financial newsletter, but there's nobody's name on it. Let me see if he signed it. And he really doesn't. It's called financial newsletter. It doesn't give a name. The number 1 gold stock he has is IM Gold, and the symbol is IAG. It's not a major. It's sort of a, if you go Papa Bear, Mama Bear, Baby Bear, it's kind of a Mama Bear. It's a gold producer in Canada, IAG, which owns operating mines in North America and West Africa. We can in Burkina Faso. We can talk about this later. I'll study it. But it is producing, which is good. Gold production of 465,000 ounces last year. That's pretty good. And no yield. The second one is a company called DRD Gold, and the symbol is DRD. DRD Gold Limited, gold mining company in South Africa. Now they do gold tailings, and I like that because it's there. There's no risk. They also do exploration. They have a 4.69% yield. That's the kind of thing to buy. Sales were up 12% year over year. Profits 29%. Gold stock number 3, which I know about, Agnico Eagle Mines Limited, AEM. That's the kind of stock to buy, AEM, because it's a senior gold mining company, and those will be the ones that move first. That this year was as low as $45, and now it's up around $60 some dollars, 63. They're all over the place: Canada, Australia, Finland, Mexico. Latin America, United States. They explore new veins near existing mines, which is that's smart. Share earnings are up by 15%, year over year revenue up 27%, and it has a dividend too, 2.61. And then his fourth one is Harmony Gold Mining, NYSE, HMY. I like that one too. They do uranium, silver, copper, and I can't pronounce this, molybdenum. Molybdenum. They have underground operations at the Witwatersrand Basin, the Kra and Greenstone Belt, and other places in South Africa. Papua New Guinea. Wow, Papua New Guinea. That's why I like them. That's why I've heard of them. And in Queensland, Australia. Total production profit increased by 25%, and free cash flow rose more than threefold. And their most profitable gold mine in South Africa was just approved to produce for another 20 years. Anyway, we'll study those. We'll try to get some more ideas going. The gold company that many of you guys went into, I heard, but I cannot confirm for sure. I'll find out. I'm going to meet with one of the guys in Denver. But I think they've raised the $5 million, which is great news. Great news. So let me see what everybody's saying. Nothing. All right, 8:20. I think I might leave it there. So tomorrow, I'm probably not going to be able to come live. If Ham's right that something comes out of receivership from the judge tomorrow in GTII, they could possibly make their filings and that starts trading again in ranges that you could see the bid and the ask. I'm not getting all excited myself yet, but Ham was really excited that they're moving forward, they being highly motivated investors. So that's let's see what happens there. I don't expect a lot to happen with Finger over the next couple of weeks, but it could. But September, I think you could see, and according to Ham, you could see an institutional brokerage firm support it. And then you could, I think obviously earnings will be coming up soon. And then whether it's this one contract or it's a new contract, I think you could start seeing fundamental news coming in to Finger. And then we'll keep an eye out for some of these other little stocks, and I'll try to update you on the oil market as I go. And I think I'll leave it there. Hey, Jeremy. So I'll just thank you for anybody that tuned in, and you helped my layover. But I may not be able to go live tomorrow. We'll see. I play hooky during the day sometimes, but I expect to be really busy tomorrow. And we used to have the baseball games we went to, but not this year. They're going to have a casino night, so I'd rather go to a baseball game. But anyway, thank you for tuning in. I wish everyone well. I hope you have fun watching the DNC, and I wish everybody peace. I wish all the kids around the world peace. And I don't know what else to say, so I'll just say well, certainly I'd be be supportive of that time frame. In the one, in Logic, what I understand is happening with Logic is the deal that was announced is completed. But I guess the market, the shorts don't care about news. So the risk with Logic is that the CEOs, there's 6 companies coming into Logic, and if each CEO looks at the price, the artificially low price of the stock, but then the other side will say, well, there's nothing there, and there's always the argument. But if Michael, if all 6 companies come in based on 15%, and they use the arithmetic rather than the artificially low prices, and they do it based on arithmetic with their valuations rather than the criminal valuations, the 6 deals should be worth around 45 cents a share. I would expect that my sort of view that everything should be done perfectly isn't how it's going to happen, because nothing ever does. So the stock's trading at 2 cents. After these 6 deals, it's worth 45 cents. So maybe it goes, maybe you have a high target of 20 cents. And maybe, get out at just a flip out at, I don't know, 6 cents to 10 cents, something like that, as it's announced. But remember, they're going to continue shorting. They do it in every stock. The key is the visibility of what's being rolled in. And I expect a lot of good news coming out of Logic this next 2 weeks, maybe, but certainly in September. I don't want to tell anyone to wait until 2025, but I'm hearing that Logic could be, $1 billion, even $1.5 billion company next year with huge revenues. But I'm not trying to move the goalposts at all. And I would say you still need to treat it as a trade unless the news is just overwhelming. Hey, Amby. Hey, Darren. And the next couple of weeks could be interesting, is all I can say vaguely. And I'll leave it there. I'm going to say good night to everybody because it's 8:30 and I have to get ready for the flight, for boarding. So, ciao.